The top business stories live from the Sky News City studio. A new cloud darkening the horizon. The IMF warns the Israel-Hamas war is threatening the global economic outlook. Former Barclays chief executive Jes Staley is fined £1.8 million over misleading statements about his links to Jeffrey Epstein. Plus, US inflation continues to slow, fueling hopes that interest rates have peaked. Good afternoon, this is Business Live with me, Ian King. The International Monetary Fund warned this afternoon that the Israel-Hamas war is already threatening a murky global economic outlook. Speaking at the annual meetings of the IMF and the World Bank in Marrakesh, the head of the IMF, Kristalina Georgieva, said that severe shocks are becoming the new normal in an economy dominated by weak growth. But she said it was still too early to predict the full economic impact of the conflict.
We are very closely monitoring how the situation evolves, how it is affecting especially oil markets. It is too early to say. We have seen some up and down of oil prices. We have seen some reaction on markets.
Oh, joining me live from Marrakesh is our economics editor, Ed Conway. Ed, even by the IMF standards, this was a statement of the obvious.
Yeah, and you can tell, can't you, from listening to Kristalina Georgieva, just how nervous everyone is here. This is, the big moment, the annual meeting for the IMF. It's where finance ministers come in from around the world, central bankers as well. So everyone is here, but they are just incredibly nervous. First of all, just about kind of what is obviously going to happen with what's happening in Israel, what the economic implications are going to be. But I would say even more than that, just very nervous about the way that they phrase things. And you heard that from the head of the IMF a moment ago. I've just heard, actually, so the G7 meeting, there was going to be a press conference after the G7, so that the group of 7 finance ministers from the industrialised nations, the UK is one of them, they've just met and they've finished their meeting, but it overran actually quite a bit. And part of the explanation for that, and they delayed the press conference, part of the explanation is they were having so much difficulty working out the phraseology on that part of the communique. They issued this communique afterwards, on that part of the communique that's going to refer to Israel. So it is concerns about that is causing lots of nerves around here. So everyone is meeting, but they aren't necessarily actually able to come up with a kind of clear message for what they think this is going to mean both for the global economy and indeed for the Middle East. I did also hear, and this is an interesting little bit of kind of Kremlinology from inside these meetings, so all of the different finance ministers from around the world meet. Palestine obviously not a member of the IMF, so it's not directly related to this, but there was a development committee meeting where Saudi Arabia, and a lot of people looking towards Saudi Arabia, working out what they're going to say. Obviously, they play a key role in the dynamic in the Middle East, working out whether this is going to, what's happened in Israel is going to undermine some of the movements that they've been having towards more peaceful relations with Israel. Well, in that meeting, a lot of people thought Saudi Arabia wouldn't say anything. I'm told, and it was a closed meeting, but I'm told from people who know what happened inside, that the Saudi Arabian representative did say, we regret the lives of any civilians killed, regardless of nationality, which was, I think, a lot of people thought further than Saudi would go in terms of underlining their sympathy towards Israel as well as towards Palestine. So it is kind of an interesting moment here, but as I say, everyone's very nervous here. They don't want to put a foot wrong. There's lots of other stuff on the agenda, like debt, like quotas, like all of the things they normally talk about here. But there's a big story going on, and it's not right here, so they're nervously looking outside.
OK, thanks, Ed. The UK economy data bounced back in August after a drop in activity in July caused by wet weather and strikes by public sector workers. The Office for National Statistics said today that GDP in August was up 1/5 of 1% in July. That was due to mainly a 0.4% rebound in activity in the services sector, with activity contracting in both manufacturing and construction. The ONS also revised the decline in July from 0.5% to 0.6%, representing the biggest month-on-month contraction since June last year, when there was an extra bank holiday for the late Queen's Platinum Jubilee. The ONS said that during June, July and August, GDP rose by 0.3%, with growth in all sectors of the economy. The energy regulator Ofgem said today it's considering a one-off upward adjustment to the price cap on household energy bills. The watchdog said a temporary rise in consumer bills of up to £17 a year or £1.50 a month was under consideration to reduce the risk of suppliers going bust amid a record level of unrecoverable customer debt. Ofgem said that money owed to energy companies this summer reached a record £2.6 billion due to a combination of the rise in wholesale energy prices and wider cost of living pressures. The restaurant group, owner of Wagamama and the Brunning & Price pub chain, has agreed to a takeover by the private equity firm Apollo. The deal values the restaurant group at £506 million or £701 million once its debt is included. The news comes just weeks after the restaurant group agreed to sell its Frankie and Benny's and Chiquito businesses to the Big Table Group, the owner of the Café Rouge chain. And shares of Mobico, the company previously known as National Express, plunged by 28% today after it said profits for the year would come in below expectations and suspended its dividend. The company said that in the first 9 months of the year, its sales have been up 10% on the same period last year, but said that improving its profits have been impacted by higher costs, particularly in the UK and in its North America school bus business, which has now been put up for sale. Mobico said underlying profits for the year would be between £175 to £185 million, down from its previous forecast of between £200 to £215 million. Jes Staley, the former chief executive of Barclays, has been banned from the city and fined £1.8 million by the Financial Conduct Authority. It comes after the regulator found that Mr Staley approved a letter sent by Barclays to the FCA, which contained 2 misleading statements about the nature of his relationship with the dead paedophile Jeffrey Epstein, who'd been a client of his at JP Morgan. Well, the ban and the fine are provisional, as Mr Staley has appealed against them. I'm joined now by our business correspondent, Paul Kelso. Paul, I've seen many people banned from the city before, but never the former chief executive of one of the big 4 banks.
Yes, it is a very big scalp, if we can call it that, at this stage. Jes Staley, one of the biggest names, not just in British banking, because of his period in charge of Barclays, but in American banking. Spent most of his career at JP Morgan, where he was head of the private banking unit for a period when he became close to the late convicted paedophile Jeffrey Epstein, and closer than he let on to the board of Barclays. When in 2019 Mr Epstein was arrested on sex trafficking charges in the US, the Financial Conduct Authority wrote to Barclays board to establish that there was no impropriety in the relationship between the 2 men. And in a letter based on information from Jes Staley, the board said that there was no close relationship at all between the men. Well, it subsequently turned out in emails they'd exchanged that Mr Staley regarded Mr Epstein as a friend. In fact, he called him one of his deepest and most cherished friends, and subsequent reporting has shown there was a long and abiding friendship between the 2 men that predated and continued after Jes Staley's appointment at Barclays. So that failure to account for the full nature of the relationship, effectively the regulator said that Mr Staley had lied to it. Hence this huge fine, £1.8 million, and an effective ban from operating in financial services. Mr Staley will appeal, but the long shadow of Jeffrey Epstein once again cast over, this time not the royal family. People will be aware of Prince Andrew's entanglements with Jeffrey Epstein, but now one of the very biggest names in British and international banking.
Thanks, Paul. Some more business news for you now. And KPMG was today fined a record £21.5 million by the accounting regulator for its audits of Carillion, the construction and infrastructure group, whose collapse in 2018 sparked a review of auditing standards. The Financial Reporting Council said the fine reflected the seriousness of the audit failings and the high number of standards breached, and it would have been £30 million had it not been for KPMG's cooperation. It said the number, range and seriousness of the deficiencies in the audits of Carillion during the period leading to its failure were exceptional, including a lack of professional scepticism, failure to challenge management and a loss of objectivity. EasyJet said today that it will resume paying dividends to shareholders after a record quarter. The airline said it expected pre-tax profits for the 3 months to the end of December to come in at between £650 to £670 million, with passenger numbers up 8% on the same period last year. It also announced plans to expand its fleet by up to 257 aircraft. It has placed a firm order with Airbus for 157 planes, mainly the A321neo, to be delivered between 2029 and 2034, with an option for up to 100 more. And the Competition and Markets Authority said today it's investigating suspected breaches of competition law by broadcasters and TV production companies. Those under investigation include the BBC, ITV and a number of independent companies, including Hartswood Films, which makes Sherlock, and Hat Trick Productions, which makes Have I Got News for You. Others investigated include Red Plant Pictures, which makes Death in Paradise, Sister Pictures, which makes This Is Going to Hurt, and Tiger Aspect, which made Peaky Blinders. The CMA's investigation concerns the way that the services of freelancers were bought. Well, news that US inflation came in slightly higher than expected last month meant that the rally in European stocks, which earlier hit their best levels in 3 weeks, petered out as the session went on. As you can see, only the MIB in Milan finished in positive territory among the major continental European indices. Talking points today include Publicis. The world's biggest advertising group finished up 5.5% in Paris after it raised its full-year earnings forecast. Well, here in London, the FTSE 100 did keep its head above water, finished a third of 1% higher in a broad-based rally led by mining and energy heavyweights. BP was the leading blue-chip gainer in percentage terms. There were not too many fallers to mention, and those that did finish lower were largely only those that went ex-dividend today. In other words, they were trading for the first time without the latest payout. They included Taylor Wimpey, Kingfisher, Tesco and WPP. If you own those shares, don't worry about that. That's only because they've gone ex-div today, those declines. Outside the FTSE, it's been an incredibly busy day for corporate news. Oxford Instruments has fallen by 7% on the trading update, while SIG, which you can see on the screen there, the old Sheffield Insulation Group, they're down nearly 9% on a profits warning. Over on Wall Street, the main equity indices have opened mixed. The Dow Jones is lower, the S&P 500 is unchanged, and the Nasdaq slightly higher. Birkenstock, which sank 12% on its debut yesterday, has given up another 3.75% this afternoon. On the foreign exchange markets, well, the dollar is much in the ascendancy again. They're sterling off 0.4% against the greenback. Likewise, the euro off 0.2%. Pound is also slightly lower against the single currency. As for the oil price, well, it's traded higher this afternoon, but it remains lower than it was at the start of business on Wednesday last week. A barrel of Brent crude will currently set you back $86.59 a barrel. That's up 0.9%. Well, joining me this afternoon is Chris Beecham, Chief Market Analyst at IG Group. Chris, great to see you. Let's start with EasyJet. A very, very positive trading update, but the shares finished off more than 5%.
Yes, I think the resumption of dividend payments was good news for shareholders, of course, but the market's just factoring the extra costs of that. And really, you're just seeing a lot of concerns about the outlook for next year. It's a very rosy update from EasyJet, obviously ordering more planes as well, but there's a sense that maybe a lot of the good times are behind us in the short term. I think if you look at the poor performance of the shares, really, I think that underscores that.
I find it rather strange, though, given that when Wizz Air and Ryanair have announced new plane purchasing programmes, their shares have gone higher. Is it just because there's the whole sector's under a shadow this week post the weekend?
To an extent, I think, yes, the caution of how well airline travel will manage in the short term. I think with EasyJet, though, it's always the one that just never really delivers. I think with Ryanair, you get what you get with Ryanair. With EasyJet tries to be something else. And the market has quite punished them, really, over the last few years because of that.
Yeah, I mean, they're not quite back to pre-pandemic capacity yet, are they? Whereas Ryanair achieved that ages ago.
Exactly, and the shares are below where they were in 2020, so they really are coming under quite a lot of pressure now.
Yeah. Now, I mentioned Birkenstock in the market, but I mean, eagerly anticipate. I mean, this really does prove the old adage: you should never buy shares at an IPO.
It does to an extent. Of course, it's been quite a thin year for IPOs, really, and the ones that we have seen, like ARM, have just not done as well. Investors really demanding a lot from companies that join the market at the moment. This is all back to the fact you can get such good income in much safer places like cash, like bond funds. If you're investing in this IPO, really, what's the outlook? And yes, they've had an incredible success for the last few years driving those sales. But where do they go from there is the question that I think they haven't really satisfied.
Yeah, I mean, they had some big-name investors who were prepared to buy big slugs of equity. I mean, why would the shares fall so much on the opening day?
I think there's a risk that there'll be others sort of cutting back on their allocation, really. They've seen when they put their money to work a few years ago, they've seen a big improvement in that since then, the valuation. But now it's just that question of where that growth will keep coming from, really.
Yeah, and it was a very, very chunky earnings multiple as well, we shouldn't forget.
Exactly.
Is there any read across to the likes of Dr. Martens here, which obviously, again, in this country trades well below its IPO price?
Yes, I think it's just the fact that we're just not getting that excitement around the sector, really. And it just feeds back to the fact we could see a recession within the next 12 months. Yes, we've been talking about that for over a year, but that continues to hang over the global economy, really.
Now, what about these US inflation numbers this afternoon? I mean, it seems to me that you could take what you wanted out of the numbers. It shows that inflation's still falling year on year, but slightly higher month on month.
Yes, exactly. And for the second month in a row, once is a blip, twice is a trend. And while the Fed this week has been keen to say we don't think we will hike anymore, the minutes in the Fed's meeting yesterday really just left open the possibility that they would have to. And I think if you get 2 or 3 months of inflation rebounding slightly, that is enough maybe just to tip expectations back in the other direction.
Does that explain why the dollar's moved in the way it has this afternoon? I'm very punchy.
Yeah, strength in the greenback, really, expectation that maybe they would, or at least perhaps more likely to than they were just a day ago.
What about the euro? I mean, I think last week the dollar rose against the euro for the 12th consecutive week, which was a record since the creation of the euro. Euro's again on the back foot now against the dollar.
And again, I think that's sort of the broadening, yawning gap, if you like, between the performance of the US and the European economies, really. You had employment report in the US last week, very, very strong. So while there's talk of more rate hikes, it looks like the US economy can bear it. That doesn't appear to be the case for the Eurozone economy. So that's why the euro remains under pressure. It's bounced this week along with stock markets, but the outlook is still fairly grim there.
All right, Chris, great to have you with us. Stay with us for now, because we may come back to you. But I just want to bring the viewers some breaking news. A defence source has told Sky News that 2 British quick reaction jets have been escorting a Kenyan flight to Stansted Airport. It's understood that Typhoon jets took over the interception from French jets. A London Stansted spokesperson has told us a Kenya Airways Boeing 787 diverted into London Stansted at just before 3:45 p.m. The aircraft, which was en route from Nairobi to London Heathrow, landed safely and was escorted to a remote stand with Essex police in attendance. The incident has been stood down and the airport is open and flights are operating as normal. Well, still to come here on Business Live. We are expecting a news conference from Tel Aviv this afternoon from the US Secretary of State, Antony Blinken. We'll have more on that as we get it. Don't go away.
I'm Helen Smith. I'm Sky's Asia correspondent, and I'm based here in Beijing. My most memorable story was covering the extreme zero COVID restrictions.
A massive COVID wave is sweeping this city, but officially, almost no one has died.
This is essentially the epicenter of the epicenter. It's the Haiju district. The message from China is clear. This is a modernized military, absolutely able to fight an international war if needed.
This is a routine exercise. It's defensive in nature.
My biggest challenge is adequately telling the stories of the Chinese people, even when the authorities would prefer me not to.
Hey.
By the rules, we are allowed to film in the streets.
To the left.
I will always remember the atmosphere at the Shanghai protests. It was an electric mix of excitement, fear, and defiance, and a sense that history was being made. It's hard to express just how incredibly unusual these scenes are in China.
There are people who are afraid.
On the streets of Xinjiang, there is still a tension. Heavy police, a sense they're always watching.
It's really an incredible eeriness to this place, and it just is completely abandoned. The Chinese housing market, for so long a driver of growth, is now a real liability. We take you to the heart of the stories that shape our world.
It's actually hard to describe the cold here. It's so intense. It literally takes your breath away.
I can't tell if I'm moving it or it's moving me, but it's a very strange feeling. The world is watching what's happening here.
The 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
Fly Emirates, fly better. Fly Emirates, fly better. Thank you.
Welcome back. Just a reminder to you that we are expecting a press conference imminently in Tel Aviv, given by Antony Blinken, the US Secretary for State. We'll be bringing that, of course, as soon as we get it. But in the meantime, we've got the luxury of a few more minutes to chat about the markets. And still with me is Chris Beecham, Chief Market Analyst at IG Group. Chris, a lot of profit warnings today among the mid-caps. I mean, Mobico is an absolute shocker, but you had Darktrace disappointing, Oxford Instruments, and then SIG.
Yeah, it's quite a trend, I think, among a lot of these companies at the moment. Again, it's this sense that inflation, while it's come down, isn't going away, and they've just not seen the rebound in demand. It seems to be the theme in these statements of we thought things would be improving by now, and they're just not. And you're seeing these estimates and these expectations come back down as a result.
Yeah, I mean, this, of course, is very, very exposed to the housing market. I guess that's the issue here. I mean, we got one yesterday in the form of Travis Perkins as well, of course.
Yes, the activity is just really refusing to recover across the board. I think because they position for maybe a better time by now, and indeed into next year, you're just seeing a lot of caution return to the sector, and investors reflecting that, really.
Yeah. Now, what about the restaurant group? I mean, this is... I first wrote about this company 29 years ago, and it was called City Centre Restaurants. I mean, not really the greatest of periods for it post the pandemic, but being taken out for a fairly tidy sum by private equity.
Yes, around about 35% premium, I think, to the share price yesterday. And this is a company, actually, the problems predate the pandemic. It overexpanded. It thought the good times would never end in the wake of the financial crisis. And then suddenly, again, maybe people shifted their dining habits. They wanted something a bit more expensive than what Restaurant Group were used to. So the shares have been on a tough time for about 6-7 years now. And this probably brings this to an end, of course, in one sense.
Yeah, it kind of feels like the private equity guys are getting a good deal because Andy Hornby, the CEO, a lot of people remember him from HBOS, obviously, but operationally, he'd really shot. Feels like Apollo are now going to reap the benefit of all that.
It does, really. They took the tough decision. A lot of restaurants cut back, really, across the board in those two big names, those Frankie Bennett, those Chiquitas that we saw everywhere. So those have gone. A shift almost entirely to Wagamamas, which is much more, I think, well-placed to benefit from an upturn in consumer spending. And so, yes, it's a very well-timed manoeuvre by Apollo.
Is there a wider story here about de-equitisation and the sort of fading attraction of listing on the London market?
It seems to be a bit of a trend. Yes, I think that you can get a broader access to investors with, particularly in the tech sector, of course, in New York. So I think it's harder and harder in some ways for London to compete. When you're losing names, even like Restaurant Group, not a huge company, when you're losing these names, it just reduces the variety for investors, really.
Now, of course, we get the first Q3 trading updates from some of the big US banks tomorrow. What are you expecting there?
Earnings season kicking off as usual. I think what we're seeing is maybe some caution in where interest rates go from here, because the banks have benefited from that surge in interest rates, which has improved their income levels quite a lot. The question is now, where do they see things going next? When does the Fed begin to cut rates? How bad do things get? Now, the US economy looks very strong at the moment, so that should be a big cushion. I think they're just worried that the peak in income increases has come and gone, and so now they're waiting for an upturn somewhere else. At the moment, with volatility relatively limited in markets, you're not going to see that boost in their trading divisions.
All right, Chris. Great to have you this afternoon with us. Cheers. Bit of breaking news just before I go. The Prime Minister has just announced a new support package to keep British Jewish communities safe. Some £3 million worth of extra funding will be provided to the Community Security Trust to protect schools, synagogues and other Jewish community buildings. Well, that's it from me this afternoon. I'm back at 11:30 tomorrow morning. Hope very much to see you then. In the meantime, next up, it's Mark Austin with the News Hour live from Jerusalem. And, of course, we're expecting those words from Anthony Blinken very, very shortly. Thanks for joining me this afternoon. Cheerio.